Just when Chevron and Occidental got everyone excited about the oil industry again with their bidding war for Anadarko, Core Laboratories, the technologists of the oil service space, well, let's just say they threw a bit of a wrench in the works. Core Labs, which helps producers analyze rocks and fluids to show them the best places to drill, reported earnings last week, and while the headline numbers were a little bit better than expected, I thought the company was a tad too cautious, given the fact, though, that oil was down $2 today to $61. I totally get it. And that's why the stock plummeted 11% last Thursday. And it's continued to trade lower ever since, even though it has the best return on investment in the comp group. Problem. Even though oil prices have rebounded from their lows, Core sees U.S. drilling activity being, again, let's call it tepid during the second quarter. Drillers have been burned too many times by the roller coaster that is crude. I think they've become more conservative. The question is, has the stock been punished enough given how great its technology is? Let's take a closer look with David Demshur. He's the chairman and CEO of Core Labs. Learn more about the quarter and the company's prospects. Mr. Demshur, welcome back to Mad Money.
Hey, Jim, thanks for having us back on Mad Money, our 16th appearance in the last 24 years.
Well, you're very faithful to our show, and I've got to tell you, David, I think that something's happened in the group. I think with oil in the 60s, they should be hiring you more, but you did say in your conference call that you're beginning to get the kind of interest that would indicate that companies are gearing up because they have to meet their production goals.
Yeah, Jim, that is correct. If we look at what the main drivers are for Core Laboratories, they are internationally based projects and deep water projects. We've seen a number of final investment decisions being made over the last 3 years, and we think in earnest in the second half of 2019, we start to see those revenues coming back into our revenue stream.
Now, which of your two different reservoir description is it that people are interested in? Which are the ones you think are going to turn first?
It's going to be production enhancement because that is mainly a U.S.-based business, and it does have some international exposure. In the second half, we look for a nice gain in revenues in reservoir description, which will drive high incremental margins, which will drive their margins back up in the high teens.
All right, so what's happening here? We've got the sanctions being extended. We've got problems in a lot of different countries like Venezuela where they're producing a fraction of what they used to produce. We don't necessarily have, what's left of OPEC on the side of lower oil. Why isn't oil dramatically higher, David, given the fact that the United States is doing so well?
Well, and that's one of the reasons why, Jim. The report out this morning was that the U.S. production has reached 2.4 million barrels a day. This is up some 7 million barrels in the last 8 years. This is a remarkable gain in crude. Yes, we do agree. We see large declines in Mexico, Venezuela, Colombia, Angola, Nigeria, and some of the northern African states like Libya and Egypt. And so there is a bit of a disconnect in the supply that is there to come on other than the United States and where the price of crude oil is today.
Okay, well, let's talk about what you're doing to be able to make it so that we can get more money out of our fields. Speak about some of your technology, because I found that some of the idea of integrating gun support continually came up on your conference call. What does that mean for companies that are trying to find more oil?
Well, when a wellbore is drilled, it is lined with casing. That casing has to be perforated so there's communication between the oil reservoir and the flow up the oil well. So a new perforating gun is out on the marketplace. It is made up of new components, one of them being an addressable switch and also being pre-assembled before they get to the well site. This is inherently safer and much easier to implement into the wellbore. For instance, if you're drilling off a pad and you got 6 wells that might have 100 perforating guns in them, you can fire those guns in any order that you would like. So you can fire gun 1 and then gun 100 and then gun 50. This will make for a much superior completion so the well can be stimulated and ultimately produce more crude to the surface.
So when, let's say, a Chevron or Occidental is trying to get the Anadarko, what they want to do is they want to use that to be able to find oil in some fields that may already been drilled on but don't have enough oil coming out without that instrument.
Well, that is correct, Jim. All three of those companies are great clients of Core Laboratories and are huge users of technology. And they're looking to apply this to ensure that they get a better return on their invested capital and increase their free cash flow, which are two demands that investors have today, to making sure that all people in the oil field are at least earning their cost of capital, where in the past decade, maybe not so much.
Now, what's happening in the actual market that I look at? Because I'm looking at the crude futures, okay? And it says that basically out to forward curve backward out to 2023, the price is about $53. Often you have felt that oil has to go up, but $53 out a bunch of years, that would not be that great for people in the oil service business.
Well, certainly one of the reasons is the U.S. inventory numbers last night bloated by about 10 million barrels. On a $4 billion barrel inventory market, this is not significant. However, traders trade off the number. You are correct. The crude oil curve is backwardated, and some of these larger projects like offshore Guyana with Exxon, Talos Oil offshore in Mexico, a lot of these are going to be brought on for greater supply. We think we're going to need every barrel and are a little surprised by the backwardation of the curve.
Now, one last thing. I know that there's talk about, I was surprised to see North Slope activity. I thought that had gone away, but it sounds like could be a potential hotspot for you.
Yeah, correct, Jim. As you know, on our call, we talked about the expansion of our Anchorage office. Stay tuned there. Right now, the North Slope's only output is about 400 to 450,000 barrels a day. We're getting down to the point where the North Alaskan Trans-Alaskan pipeline needs more feed oil into it to keep it viable. There have been some large discoveries there, and we're going to see some nice developments over the next several years off the North Slope of Alaska and offshore Alaska.
Well, that's great insight, because I don't think many people have that or know that. You've hung in there, best return on invested capital. I always have to appreciate what you're doing, even in a doldrums market. I want to thank David Demshur. He's the chairman and CEO of Core Labs, the technologist of the oil field. Mad Money's back into it. Booyah! Jim Cramer here from Mad Money. Thanks for watching CNBC on YouTube. Click here to subscribe and get the jump on my exclusives with CEOs, plus market news, investing advice, and a whole lot more.